What's up? Konnichiwa, y'all. I'm Russ. This is Dapper Dividends. Thank you for swinging on by the channel and investing a little bit of your time with me. Before we get into the dividend ETFs, if you like that intro animation video that you just saw, I did that in like 5 minutes at Videos. Looks really cool. You can make those very easily as well. Click my affiliate link in the description below. Special discount. Head on over to Videos, poke around, see what you think of it. Also, I have my 3 portfolios at degrin.com as well in the description below. Click on one of those and you can keep up to date with what I have across 3 of the portfolios that I share. Now, a lot of you have been asking about dividend ETFs. I am not a particular ETF investor. I do invest in the SoFi weekly, ticker WKLY ETF, kind of is an experiment to follow along on the channel so I can play along at home. Now, the dividend ETFs, I don't have 1, 3, 7, 9, or 10, but 11 of the top dividend ETFs that you can buy and consider buying right now. But before we get into that, now these are all at ETF.com. We're going to go over the ticker, when they were created, a little bit about the fund and what it's aiming to do in its description, the expense ratio, the distribution yield, and the top countries and some of the top holdings. So without further ado, let's get it on. Coming in at number 11 is the SPHD Invesco S&P 500 High Dividend Low Volatility ETF. You want high dividends and you want low volatility, this is the one for you. They give it a B rating. SPHD tracks a dividend yield weighted index comprising the least volatile, highest dividend yielding S&P 500 stocks. It was created in 2012. Has an expense ratio currently of 0.30%, distribution yield of 2.54%, 100% allocation to the United States. 3 of the top 10 sectors are utilities, number 1, consumer non-cyclical, number 2, and financials, number 3. Some of the top holdings are Iron Mountain, Lumen Technologies, ExxonMobil, Kinder Morgan, and Altria Group. Number 10 is ticker VIGI, the Vanguard International Dividend Appreciation ETF. This is basically the international version of the VIG, which we will see in just a little bit. Gets a grade B rating. The VIGI tracks a market cap weighted index of developed and emerging market firms, ex-US, a little bit of Latin thrown at you, meaning without US, so they're not in the US, that have increased their annual dividends for 7 or more consecutive years. This was created in 2016, has an expense ratio of 0.20%, and the distribution yield is a little bit low at 1.08%. 3 of the top 10 countries are Japan at 16%, Switzerland at 16%, followed by Hong Kong. Top 3 sectors are technology, industrials, and financials. Some of the top holdings are Nestle, Roche Holding, Novartis, Tencent, and Equity Other, which is Equity Other. So that means other equity. Number 9, the VYMI. This is the international version of the VYM, the Vanguard International High Dividend Yield ETF, with a grade B. VYMI tracks a market cap weighted index of developed and emerging market firms, not in the US, ex-US, that are expected to pay above average dividends over the next 12 months. This was created in 2016 with a 0.27% expense ratio, a 2.95% distribution yield. The United Kingdom, Japan, and Switzerland make up the top 10 countries. Financials, basic materials, and energy are the top 3 of the top 10 sectors. Some of the top 10 holdings are Nestle, Vanguard Cash. Let's see what that is. The Vanguard Cash Management Market Liquidity Fund. I don't know what that is, but if you do, please let us know in the comments below. We would love to hear that. Toyota Motor Corp, Novartis, and Roche Holdings. Coming in at number 8 is the SPYD, the SPDR's portfolio S&P 500 High Dividend ETF. SPYD tracks an index of the 80 highest yielding stocks selected from the S&P 500. stocks are equally weighted with an A rating. You want high yielders, this is the fund for you. Created in 2015 with an expense ratio of 0.07%, a distribution yield of a very stout 4.56%. They have 78 holdings, 100% allocation to the United States. The top sectors are financials at 42%, energy at 14%, and utilities at 13%. Remember, these are all equally weighted, so they're going to be very close in that 1% range. Top ones are Seagate Technologies, Iron Mountain, Regency Centers, Kraft Heinz, and Fifth Third Bank. Oh, number 7, the NOBL, ticker NOBL, ProShares S&P 500 Dividend Aristocrats ETF. An A grade, the NOBL tracks an equal weighted index of S&P 500 constituents that have increased dividend payments annually for at least 25 years. Very solid that these are in the aristocrats. They have increased their dividend, as they said, for 25 years. Created in 2013 with an expense ratio of 0.35%, moderate expense ratio, and a distribution yield of only 1.90%. 100% United States allocation. 3 of the top 10 sectors are consumer non-cyclical at 21%, so very defensive. Industrials 20% and financials at 14%. Some of the top 10 holdings are Nucor Corporation, Franklin Resources, Expeditors International, Archer Daniels Midland, and Cincinnati Financial. Number 6, the VIGI, the Vanguard Dividend Appreciation ETF with a grade A. The VIGI tracks a market cap weighted index of U.S. companies that have increased their annual dividends for 10 or more consecutive years, so they have to focus on dividend payment increases for 10 years. VIG was created actually April 21st, 2006. That was the day after I turned 28. It has a 0.06% super low expense ratio, a distribution of 1.51%, and 249 total holdings. 100% United States allocation. 3 of the top 10 sectors are technology, industrials, and healthcare. And some of the VIG's top holdings are Microsoft, JP Morgan, Johnson & Johnson, one of my favorites, Walmart, and Visa. All right, we're into the top 5. Number 5, the SDY. The SPDR S&P Dividend ETF with an A grade. SDY tracks a yield-weighted index of dividend-paying companies from the S&P 1500 Composite Index that have increased dividends for at least 20 consecutive years. You buy this, you're knowing that the companies within have increased their dividends for at least 20 years. Created way back in 2005 with a 0.35% expense ratio. Distribution yield 2.53%, and they have 113 holdings. 100% United States allocation. 3 of the top 10 sectors are financials at 22%, industrials at 16%, and consumer non-cyclical, the defensive stocks, at 16%. Some of the top SDY holdings are ExxonMobil at the tippy top, AT&T, South Jersey Industries, Chevron Corporation, and International Business Machines. Now, some of those top 5 stocks, a lot of dividend growth investors are on shaky ground with those, especially ExxonMobil. I do invest in ExxonMobil, but I would not be surprised to see them just get rid of the aristocrat status and go ahead and cut the dividend so they have some more cash freed up to help out that balance sheet. Numero 4, number 4, DGRO, the iShares Core Dividend Growth ETF with a grade A rating. The DGRO tracks an index of U.S. stocks that are selected by dividends, dividend growth, and payout ratio, then weighted by dividend dollars. So they're going to weight that by who is bringing in the most dividend dollars to the fund. They also require that they have a 5-year track record of dividend increases. Created in 2014 with a very low 0.08% expense ratio and a very nice 2.06% distribution yield, but 389 holdings. Dios mío, that's a lot of companies. 100% allocation to the United States. 3 of the top 10 sectors are technology at the tippy top with 19%, financials at 17%, and healthcare at 16%. Some of the top holdings are Microsoft, Pfizer, Apple, Johnson & Johnson, and JP Morgan Chase. And they do have one of my favorite bond-like companies with their dividend, Procter & Gamble, at number 7. And number 3 is fine by me. It's HDV. The iShares Core High Dividend ETF is an A rating. The HDV tracks a dividend-weighted index of 75 high-yielding U.S. equities screened for high earnings potential and dividend sustainability. So if you want high yield, high earnings, this is the ETF for you, but do keep in mind that REITs are excluded. This is issued by BlackRock. Inception date was 2011, 0.08% expense ratio, and a distribution yield of 3.61%. I want to point out one thing. You can invest in BlackRock, who does pay a very healthy dividend, and you will effectively be receiving compensation from all the expense ratios from all the people that buy the ETF. So kind of cool that you can own BlackRock and be on the other side of the ETFs receiving part of the expense ratio instead of paying it. 100% allocation in the United States. 3 of the top 10 sectors in HDV are energy, healthcare, and consumer non-cyclical. A few of the top 10 holdings at the tippy top with 8% is ExxonMobil, JP Morgan Chase at 6%, number 2, Johnson & Johnson, Verizon, and Chevron. And again, one of my favorites, almost cracked the top 5, Procter & Gamble at 5%. And number 2 on the list is the SCHD, the Schwab US Dividend Equity ETF with an A rating. SCHD tracks a market cap weighted index of 100 dividend-paying US equities. The SCHD is focusing on quality companies with at least 10 years of dividend increases, was incepted in 2011 with a very low 0.06% expense ratio and a very nice distribution yield of 2.73%. 100% United States allocation. 3 of the top 10 sectors are financials, technology, and consumer non-cyclical. You can kind of see that a lot of these have financials, technology, and consumer non-cyclical at the top. They get that technology in there to help boost the growth, and then the consumer non-cyclical toward the top to boost the stability of the dividend. So kind of a little interesting the way they see that they construct these, and you can always look at all their holdings and copy them if you wanted to and not pay the expense ratio. So in this one, some of the top 10 holdings are Home Depot at number 1. That's the first one we've seen Home Depot at the top. Pfizer, International Business Machines, IBM, Texas Instruments, and PepsiCo. That's the first one we've seen with PepsiCo in the top 5. I have been buying 1 share a week. I'm on 50 weeks now with PepsiCo, and check that out. BlackRock is number 6. So if you want to buy an ETF that owns BlackRock, SCHD is the one for you. And the number 1, in my humble opinion, dividend ETF is the VYM, the Vanguard High Dividend Yield ETF with an A rating. The VYM tracks the FTSE High Dividend Yield Index. The index selects high dividend paying US companies, excluding REITs, and weights them by market cap. So this is more conservative, broad focused dividend ETF. It does exclude REITs, and it was incepted in 2006 with a very low expense ratio of 0.06%. and a distribution yield of 2.83%. 100% United States allocation. Financials make up the top of the top 10 sectors, followed by consumer non-cyclicals and healthcare. Some of the top holdings are JP Morgan Chase, Johnson & Johnson, Home Depot, Procter & Gamble, and Bank of America. So there it is, the top 11 dividend ETF selected by yours truly, and if you don't like it, I don't care. No, I do care. I want to hear what you have to say, so much so that I'd like you to ring that bell if you were helped at any point, and please keep the conversation going. Let me know what I missed. Let me know what you think should be number 1, 2, or 3 on the list. I really would love to hear it. Or you can let me know at Twitter, at RustyRam78. That's where I'm at. And yeah, check me out there. And if ETFs are your thing, check out this video on all you need to know about the weekly ETF from SoFi, and I'll talk to you over there.